And so when you think about Tesla in building out a robo-taxi fleet, they don't have to do it all from the go. They don't have to say, we're going to do it all. They can leverage partners, Uber, Lyft, other companies that want to compete, right? And be able to have these vehicles out there. And then over time, if they want to slowly but surely build up their fleet bigger and bigger, so, people use the Tesla app to book a car instead of Uber app, then they can do that, right? But they don't have to do it all from the go, right? And also, they can leverage the existing Tesla fleet as well. The customers where most of the time your car sits in your garage not doing anything, right? Once again, using those customers to have a way to make money, and their car can go, boom, garage door opens, the car drives away, and does its thing. Obviously, there was a huge emphasis on AI, self-driving vehicles, robo-taxi fleet, all those sorts of things, which all that information was good, but for the people that are sold on that, we're already sold on that. And for the people that aren't on that wave, I don't know if anything necessarily changed their mind today. Maybe, maybe not. Alrighty, folks, welcome in, welcome in. Oh my goodness. So holy smokes, this ain't no jokers, baby. We got Tesla earnings on deck. Oh yeah, no one's excited about Tesla earnings. But I am. I'm excited about Tesla earnings, okay?
Mike Santoli, I'm really
only every day could be that good.
Hear what these numbers are, because the stock right now is up more than 7.5%.
What is?
In overtime. Oh! Of course, this is just an initial reaction. Put that into context for us, because so much is going to depend on
what's
what
going
the
on here.
Language is on the conference call. How much does that matter for Tesla in particular?
The conference call matters significantly. It matters more than the numbers.
Any sort of, I guess, volume guidance, deliveries guidance that has some credence to it, because the story, has changed from we're supply constrained, we sell every car we can make, to obviously not being able to have enough demand to keep your margins and prices up. Stock's down 40% year to date coming into this. So obviously, we definitely had a stampede out of it. So we'll see if it was less bad than maybe people were bracing for in terms of the actual numbers. I'm on the side of Tesla. Kind of was never a bellwether for much, except for a certain category of investor risk appetite, where you had this sort of go, we're just going to pay any premium for something that we believe is one of these multi-year winners. I think that game more or less ended a while back.
Okay. So, Adam, as we do continue to go through the results
for
Tesla here, I mean, looking at GM this morning,
they never give me the numbers. They never give me them.
We got commentary from that company about possible profitability, more profitability within the EV segment in the second half of this year. Signs of recovery writ large across the broader market here, potentially?
Yeah, I mean, I think GM, was encouraging, and they also, they're benefiting from a broad product lineup of traditional ICE cars, hybrids, and EVs. They also have a very reasonable multiple, and so that helps give,
oh, come on,
for the stock,
Tesla, my Tesla.
It's
I want this shareholder deck.
EVs, and
give me
then,
the deck.
Multiple support is certainly not nearly what it is with a Ford or a GM, but, you had a lot of big industrial companies today. Is it UPS, it's GM, GE, all of which had relatively sanguine things to say about the underlying economy, and so it's certainly encouraging.
Tesla. Phil LeBeau has the numbers for us.
Here we go, Phil.
Here in the
Let's go, Philly. Give it to us.
Morgan, it's a miss on the top and the bottom line for Tesla. We're
going
to start crunching the numbers with
double
the numbers.
Miss.
But let me give you the top and the bottom
Love
line.
double
First
misses.
of all, bottom line, they earned 45 cents a share in the first quarter. The street was expecting 51 cents a share, so a miss by 6 cents a share. Revenue coming in at $21.03 billion, light of estimates, which were at $22.15 billion. So, and the top and the bottom line, you've got a miss there. And then one other note regarding guidance on deliveries for 2024. We were looking for a number. We have not come across one yet, except for language similar to what we heard in the fourth quarter, that they expect notably lower deliveries this year, 2024, compared to 2023. What does that mean in terms of specifics? Haven't come across that yet, guys. But again, you have a miss on the top and the bottom line.
That's a trough type statement.
Dive into the numbers, look at things like automotive gross margins, excluding credits, et cetera, and we'll have that for you in just a bit.
So I hate to ask a question, Phil, that has no answer that a reporter can give, but have you seen anything in this report yet that would explain why the stock spiked up almost, 8% initially? Now it's down around 3%. Maybe it's just algorithms out there or some initial anything?
Not yet. Not yet, John. Have not come across something. And there may be something within these numbers that when you start crunching them and going through it and you say, okay, not as bad as we were expecting. Or when you look at the energy storage business, maybe there's some indication, some news in there that will give people some optimism here. But nothing at this point that you can hang your hat on and say, well, that's exactly why the stock has moved higher.
Okay. Well, we know we got 31 pages in this report to go through, so Phil, we'll let
Yeah,
you
if I
get
could
back
get to
to
page
it.
one, that would be
In the meantime,
awesome.
just taking a look, even at page 1 here, John, I mean, they're talking about increased AI training compute by more than 130% in Q1, record energy storage deployment, produced over 1,000 Cybertrucks. We don't really talk very much about Cybertrucks in a single week in April, and talking again about the fact that the future is not only electric, but quote unquote also autonomous, perhaps teasing ahead to that robotaxi announcement we get in August.
Yeah.
I know, you're very skeptical about
I'm just
this.
saying, be careful out there. It's a stock that's being watched very closely. It was initially up like 8, then it was just down around 2.5 a bit. Now it's up at 4. It's going to be a long afternoon for those trading Tesla.
Yeah, and we're going to continue to pull on the threads here. Adam Crisafulli, though, I mean, we've been talking about and debating whether the AI trade has gotten long in the tooth, and Tesla is one of those names, for better or worse, as we do talk about robo-taxis and debate the future of that and what that looks like, whether it comes, whether regulators actually even approve such a thing. This is a company that has a lot of AI talent in it. Elon Musk has talked about the fact that it's been hard to hang on to that talent, and we have seen this reemergence just this week of companies, and we'll see more of it, of companies with artificial intelligence.
Yeah, I mean, Tesla's been talking about AI with their Dojo initiative, and they talk about how it's critical for their full self-driving, which is critical for autonomous driving down the road. So, they certainly do like to incorporate a lot of AI into the narrative, and I'm sure we'll hear a lot about that tonight. It's not really moving the needle on earnings or revenue yet for the company, and I think that's kind of the big problem. There's been a lot of rhetoric about how important AI is, but it hasn't really shown up financially. And so, I think a company like Meta tomorrow or Microsoft on Thursday, those are really where you're really seeing AI drive enormous earnings and revenue. And I think that's really kind of what investors are really looking for. And actually, tomorrow morning, there's a company, Vertiv, which will be a very important barometer for kind of just data center construction for people looking for the next AI data point.
Okay.
So if we look here, good old Tesla ESA numbers, I couldn't pull it up on my phone, computer, anything. It's like insane. Anyways, Tesla having technical difficulties here. Total automotive revenues, $17.3 billion, down 13% year over year. Energy generation and storage revenue up 7%. Services and other revenue is a real bright spot for the company. Look at that growth, 25% year over year. That number should continue to boom, especially now that they dropped FSD to $99 a month. We should see a lot bigger uptick there, so that's really good news. Total revenue is down 9%, total gross profit down 18%. Total GAAP gross margins, generally accepted accounting principles, down 199 basis points there. Interesting. Operating expenses up 37%, so up significantly. Income from operations down 56%. Operating margins down 592 basis points, which is just a fancy way of saying 5.9%. If we look at adjusted EBITDA, down 21%. Net income attributable to common shareholders on a GAAP basis down 55% year over year. Non-GAAP basis down 48%. EPS down 53%. On a non-GAAP basis down 47%. CapEx up 34%. Free cash flow down 674%. Cash equivalents up 20% on a year-over-year basis, but down on a quarter-over-quarter basis, right? So obviously the company is spending heavily for the future, which I think our Tesla longs are full believers of. Obviously the short sellers aren't really believers in the long term, and that's fine. But we believe Tesla should be spending for the future. Now, net income obviously down significantly year over year. Doesn't come as a surprise. And one thing I'll say about that, and one positive, if anything, is we're still pretty incredibly profitable considering all the insane amount of price cuts, considering low volumes for relative to Tesla, right? And to still put up, let's call it $1.1 billion in net income on a GAAP basis. That's still, fairly impressive given that the business model is obviously not in a good place right now. We all know that, right? I mean, it used to be thought that if Tesla's revenues were going down, the net income would be negative, right? And that's just not the situation we have. We have revenue down 9%. and the company still obviously very, very profitable. So that's one of the few bright spots in here that I have found so far. We'll keep running through it here.
You got to read through it all before you finally get the little nugget that tells you why the stock is moving higher. The concern has been, are they not going to be developing a new lower-priced vehicle? Well, they do say within their release that they have updated their future vehicle lineup to accelerate the launch of a new vehicle, the start of production, lower-priced, more modestly priced vehicle in the second half of 2025. These new vehicles, according to the
Elon already freaking said this.
Will utilize aspects of the current
2 weeks
platform.
ago.
So it's not saying, hey, it's Model 2. They are saying that there are more affordable priced models, that some of them will start production in the second half of 25. That's the kind of definitive
You already said that.
Piece of information that investors were looking for and that Wall Street were looking for. Because when you look at the numbers, it's not
Over
a good
1,000
quarter,
viewers.
guys. A couple other ones that I wanted to share with you. Free cash flow, negative free cash flow. And I can't remember the last time Tesla had a quarter of negative free cash flow, negative 2.5 billion of free cash flow.
4 years ago, 5 years ago.
Auto margins,
4 or 5.
excluding zero emission vehicle credits, at one time this was up around 26, 27%, down to 11.6% in the first quarter. Gives you some perspective, guys. Also, operating profit margin of 5.5%. Gives you some perspective of the pressure that Tesla felt in the first quarter.
Okay, quickly, Phil, if it's cheaper models that utilize aspects of the current platform, is that lipstick on more price cuts?
No, I think what it is we are going to be coming out with some lower priced models, not necessarily. So you're suggesting, John, are they going to take the Model 3 and strip it down even further and have Model 3 Lite? No, I think what they're saying is they will take what they have from the Model 3 and the Model Y. Those will be incorporated into some lower priced models. That's just my take in terms of reading the release.
Somebody asked, what's my take on where the stock ends after hours? It all depends on the conference call. What you're seeing right now is pretty irrelevant, just to be honest. This is fun to watch the stock go up and down, but it's actually all irrelevant. This stock will go up a lot more or down based upon the conference call. People need to be confident that margins are troughing right now. Profitability is troughing right now. It's going to start to get better in the back half of the year. If people can be confident that Q1, Q2 margins in profit numbers, this is as bad as it gets. In the back half of the year, we start moving back up, and then as we go into 25, the stock will blast higher, and you'll see it up 10, 15% after hours. But if we don't get that, you could actually lose these gains. We could finish negative after hours. So it's all food for thought. This conference call is everything.
That's just my take in terms of reading the release at
this
point.
is just child's play right now. The conference call in a little bit, that's real deal Holyfield.
With more modestly priced models, that's exactly what the street wants to hear. The street is not focused on robo-taxi. That may be Elon Musk's dream in terms of taking this company there someday. That's not what the street wants to hear over the next couple of years. What they want to hear is what they saw from Tesla in this release, and obviously will be at the point of a lot of questions this afternoon during the analyst call. What do they mean in terms of more modestly priced models that will go into production in the second half of next year?
Yeah, I realize we need more details on that, but quickly, Phil, does that mean we can put to bed this Reuters report that everybody's
yes,
been
we could already put it to bed.
Despite the fact that Elon Musk basically batted it down, although not a lot of detail on X a couple weeks ago?
The one that said that they were going to scrap doing a Model 2 altogether. Yeah, I think, and there were a couple of reports after that, Morgan, where people came out who had talked with executives within the company who said, look, they're still working on this. Robotaxi is going to be getting more attention, but we're not done coming out with lower priced models.
All right, great clarification. Phil, thanks. Let's talk more Tesla with Tasha Keeney of
Tasha Keeney's here.
Steve Wesley of the Wesley Group, also a former Tesla board member. Welcome, both of you. Steve, I'm trying to figure out how you get out of if you're Tesla, you get out of a price competition, cheaper Chinese EVs situation by, through price cuts and a cheaper car that has aspects of the current platform. What's the optimistic scenario here, Steve, that you see?
Look, you've got to get a $25,000 car out to market. And let's be honest, this was a terrible quarter. Year-over-year decline in Q1 sales haven't happened in 4 years. Poor Cybertruck numbers, increasing competition from BYD, Hyundai, Kia, 40% decline in share price. It doesn't get much tougher than that. On top of this, Elon's putting huge amount of pressure on the big August 8th robotaxi event. And my gut is anything less than an earth-shattering news on full self-driving and no 25K car could trigger a sell-off. Right now, Tesla needs to focus, and they need to get dates for bringing that new $25,000 car to market. If they do that, there's a lot of silver lining out there for them.
Tasha, your price target on Tesla is more than 10x up from here. So what is it that convinces investors in this situation that Tesla is worth that?
Yeah, I do think money is going to matter. I'd say, from a cost perspective, I mean, we know that because Tesla is lowering the prices on its vehicles, it's just going to be even tougher for other automakers to compete. And I mean, they say it in their letter. Other traditional automakers are actually pulling back on their electric vehicle plans, which is a humongous mistake, and in fact might just cement their extinction from my perspective. We've done a lot of work, my colleague Sam Porras, on Wright's Law, and we think that battery costs are declining in line with Wright's Law, which means that for every cumulative doubling in production, you get a reduction in price. So, we see Tesla, they mentioned in the letter that COGS for the cost of goods sold for the Model Y are at all-time lows. We expect those to continue to come down. And now that they've cut prices, I mean, I'd be shaking in my boots if I was a traditional automaker.
Yeah,
and,
they
just
should
quickly
be.
On robotaxi,
Poop their
I
pants.
think that AI has continued to surprise us. And in fact, we published in our Big Ideas report this year that if you look at the forecasts of when we think we'll get artificial general intelligence, they've been decreasing pretty significantly over the past year or so. And that's because AI improvements are actually hard to predict. The night before ChatGPT came out, I don't think any of us knew what it was going to these
That's
things
true.
happen overnight. I think Waymo has proved that it's possible because there's already robotaxis today on roads in the U.S. Paying passengers. And I think Tesla's going to be the first to do it at scale. So I wouldn't sleep on that opportunity.
True.
Okay, Tasha Keeney and Steve Wesley, thanks for joining us as we do await the earnings call for Tesla.
Oh yeah, I can't wait for this earnings call. That's where things are going to get real interesting. Everybody was expecting Tesla stock to crash massively after hours, and it's just a lot of times the stock market, whatever everybody's expecting, the opposite happens. But the conference call is still an important part. We're not out of the woods in regards to Tesla, and plus, I honestly want Tesla lower. So if I had it my way, I'd rather Elon and the team not say anything about margins troughing, this quarter and things getting better in the back half of the year. Talk down everything, because then the stock could be lower in the short term. I wouldn't mind that. I'm buying a lot of shares right now in the Patreon portfolio. Somebody says future will be ours. Bad earnings for sure. Yeah. Somebody says not too bad. Most manufacturers are throwing in the towel. Yeah. All these manufacturers, auto manufacturers that are now going against EVs and not spending, they're going to find themselves in a bad situation. And the worst thing ever for all those auto manufacturers is if we actually go into a recession in the next year or two. Because all of a sudden, those companies will start taking massive losses. They can't afford to take massive losses. Many of those auto manufacturers are loaded with debt. Whereas Tesla's, debt-free pretty much, right? So the other auto manufacturers loaded with debt. They don't have huge cash balances. And so if they had to start taking losses, they can't invest in EV at all at that point in time, which then you just eliminate your future. So it could get people don't really understand the ramifications that if a recession comes, that it would be the best thing to ever happen to Tesla and the absolute worst thing to happen to every other auto manufacturer in the whole world. So not a lot of people get that, but if it ever happens, they'll understand quickly. They said costs, are going to be up for Tesla. Nothing surprising. Numbers are bad as we expected. Yeah. When is the call? It's here in a bit. It's not right now, though, obviously. But we'll jump on the call as soon as it starts. Bullish wording on next-gen vehicle. Yes. This is fine. Tesla's always moved on future promises and long-term milestones. Yeah. For a moment there, it almost looked like it was going to turn negative, right? It kept going down, 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 and then bounced straight back. Hoping they have good guidance in future quarters. Once interest rates go down, Tesla rolls. Could, unless you're in a recession, right? And then demand for vehicles is in a lower place. Elon is happy because he will get his $56 billion pay package. Tesla, you think it bottomed? I think it bottomed as long as Elon or management on the team, CFO, commits to margins bottoming in this first half and get better in the second half. Then we can say it's truly bottomed. Outside of that, it's game's wide open. Tesla said it will accelerate the launch of cheaper cars. Big news. I would say, I mean, I already expected that. And I think a lot of us Tesla longs already expected that. That's just, I think, more of information for Wall Street, but we already thought that. I don't have a position in Tesla. What price should I start? Well, you do what you want to do. I'm not your financial advisor, man. I'm not a financial advisor. Tesla's a clear winner of the EV race. Somebody says, bye-bye Uber and Lyft. I think Uber and Lyft, at least Uber, I think they'll leverage somebody's technology long-term. So I could even see Uber buying massive amounts of Teslas in the future and having those drive folks around, right? So I don't know. Well, there's many options there. It doesn't mean they're going bye-bye. Tesla now up 8% after hours. Wow, very nice move for Tesla. But I'm just going to be honest with you guys. We could lose all this after hours. If the conference call goes really bad, we'll lose all these gains. If the conference call goes really good and we get any sniff out of, troughing this first half of the year, we'll take it way up above this. Like 8% will be child's play. You'll see 15%. So keep that in mind. Enphase is being helped out tremendously by Tesla after hours here, folks. Tremendously.
Taking off on Q1 results, shares actually soaring. This is despite a miss on the top and bottom lines. Investors seemingly excited that the new models may be coming sooner than expected. If the gains hold tomorrow, it will be Tesla's best day since September. Hasn't had a lot of best days lately. CNBC's Phil LeBeau joins us now to break down the results. Phil, what happened here in this report?
What happened, Philly?
Well, it's what they said in the indication of new models that are coming, the more affordable priced models. That is exactly what the street wanted to hear. The street didn't really want to see what they saw for the first quarter. And let's go over those numbers. None of these numbers are good. Any way you look at it, this was an ugly quarter for Tesla. Earnings miss, 45 cents a share. The street was expecting 50.
But you know what? You know what the difference is between Tesla and other automakers? When other automakers have an ugly quarter, they lose money. And they lose a lot of money. When Tesla has an ugly quarter, they still make $1 billion plus of profits. That's a difference.
Short of estimates coming in at $21.03 billion, operating margin of 5.5%, negative free cash flow of $2.53 billion. Yeah, it was ugly any way you look at the first quarter. But then Tesla put out its future outlook, which is, not always the clearest, but this time they were pretty clear, saying that they will accelerate new model launches, including more affordable vehicles. Leave that to your interpretation, whether or not you see one coming in at $25,000 or just a little more affordable than what we see with the Model 3 right now. Start of production likely in the second half of 2025. But it's clear when you read the note from the company in the earnings release, it is clear they are moving quickly to roll out newer models. By the way, delivery growth notably lower in 2024 than 2023. And I think last year the delivery growth, something like 19%. Notice that's not total deliveries, it's delivery growth. So the street's expecting 1.9 million vehicles to be delivered this year, guys. We'll see if that's going to be the case. We'll see how second quarter develops here. We know what the first quarter was when it was down 8.5% year over year. Guys, back to you.
I don't mean this to be a trick question, of course, because it's always hard to predict, Mr. Musk, but any indication of what we might be hearing on the conference call when that does kick off?
Well, I think one of the main questions is going to be, how many vehicles are you looking at in terms of accelerating the development of? When you say more moderately priced vehicles, are we talking something substantial? They plan to incorporate the current existing lineup of vehicles as they roll out these newer ones. They want some clarity. That's what the analysts are going to be looking for. By the way, with regard to robotaxi, there is one sentence in the release at the bottom in terms of the development of robotaxi, simply saying that they will continue the development of this. Remember, August 8th is when they have said we will unveil the robotaxi or give more details regarding the robotaxi. No doubt that conversation will happen to a certain extent tonight during the call, but I think most of the call's questions will focus on the development of these newer models.
We've got a little bit more on Tesla's results. Let's bring in fast money friend Gene Munster of Deepwater Asset Management. Gene, it's great to have you here. What are your thoughts here? We know the conference call hasn't kicked off and we only just have the release, so still a lot of questions percolating, but what's top of your mind here?
Well, I think what it's come down to is there's a question, is Tesla smoke and mirrors or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and robotaxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock, it's going to move based on what happens on the earnings call at this point.
Yep, that's exactly what I've been telling you guys. Hey, question. 5 years from today, what is Tesla stock price? Let me know, chat. Let me know in the chat.
Stock, it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on delivery, so I think that could pressure the stock tomorrow.
700,
but
400,
ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic, and I think that I just believe in what they're doing from an innovation standpoint.
Do you think the stock movement is justified?
Yeah, my personal opinion, it looks like you guys got a lot of different targets. Some of you guys saying 2,000, 1,200, 1,500, 500, 650. So my opinion is, in terms of what Tesla stock price is 5 years from now, I believe lowest I see is 400, highest I see is 800. So we can put a midpoint on my number of $600 5 years from now. That's where I'm at. That's where I'm at. The fact is, when it comes to Uber, they're known with getting a ride somewhere, right? And the other fact with Uber is they'd be extremely more profitable if they didn't have to deal with the driver. Travis, the founder of Uber, said years ago, like, our biggest problem is we got a driver in the front seat. If we didn't have that, we'd be extremely profitable, right? So in Tesla could be incentivized to have their own fleet, but they also might not be. And the reason being is it's going to be huge cost. Versus, why not sell those vehicles to Uber, right? Have Uber operate the fleet, and you can make money that way. And Uber's already a service that everybody knows to get rides from, right? And then if Tesla wants to slowly build a fleet of their own over time to compete with them, then they could, right? And then Uber might also leverage other companies' technology as well, right? Because eventually, and this won't happen short term, but eventually long term, self-driving will actually end up being commoditized. And so, that's kind of my viewpoints on that. They'll figure out ways around it. The good news for this is, everything's over years, and it's not like it happens in a day and then everything's changed forever.
About $10 billion per year. They did last year about $9.5 billion in operating income.
And the other thing I think Tesla's going to be able to do is I think they'll be able to leverage the current existing fleet of Teslas out there that people have, that their vehicles are sitting in their garage. And once you have a vehicle that's perfect at driving, you can go have it drive people around when you're not using it, right? So that's just another factor to kind of take into account. And then Tesla obviously will be kind of a middleman making like a service fee off of all that. Yeah, and the thing is, when it comes to Tesla, they could do a very similar approach to how Amazon did it back in the day, right? Amazon, it wasn't like Amazon had this fleet of airplanes and this fleet of trucks driving around your neighborhood delivering packages all the time. If I take you back 10 years ago with Amazon, they were leveraging FedEx, UPS, USPS, right? They didn't have their own fleet of planes flying stuff around. So if I took you back to Amazon 10 years ago, it was a very different company. And so when you think about Tesla in building out a robo-taxi fleet, they don't have to do it all from the go. They don't have to say, we're going to do it all. They can leverage partners, Uber, Lyft, other companies that want to compete, right? And be able to have these vehicles out there. And then over time, if they want to slowly but surely build up their fleet bigger and bigger, so, people use the Tesla app to book a car instead of Uber app, then they can do that, right? But they don't have to do it all from the go, right? And also, they can leverage the existing Tesla fleet as well. The customers where most of the time your car sits in your garage not doing anything, right? Once again, using those customers to have a way to make money, and their car can go, boom, garage door opens, the car drives away, and does its thing. So these are just all factors. I don't know what that noise was. So somebody was scared about Tesla. So let's say I have my Model X go drive people around, right, on the robotaxi fleet. Somebody was concerned about, people are going to mess up the car, right, either purposely or accidentally, I guess. But and, I don't know, bring some scissors into it and start ripping up the seats or something. So let's say that happens, right? Well, first off, if Tesla wants to do this, right, and you go through the Tesla app, for instance, okay, everybody's got to enter in their full name. They've got to enter in, a government ID, so your driver's license or a permit or some sort of government ID. And, by doing that, and you can have all AI read it, so it's not like some human has to look at everything. The AI can, kind of tell if it's a fake ID or not a fake ID, and if everything matches and whatnot. Once all that's set up, then you have the information. There's cameras, I don't know, I know not everybody's educated on Tesla cars, but Teslas have cameras literally all over the car. Every single angle you could ever imagine is all covered. So if anybody messed with one of the cars, you would literally have it on camera. Everything's saved. Inside the car, there's also a camera that sees everything that goes on in that car. So if anybody tries to mess with anything, that's not even an issue, right? So that's just a little food for thought in regards to that. That's not even a concern at all. Okay, time for the conference call, folks. It is that time.
My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements.
Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024
for leasing,
to grow at least 75% higher
lease.
from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%.
Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla.
Ooh.
We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways. Thank you for helping Tesla get to where it is today over 7 years. It's been a pleasure working with you.
Thank you so much. And thank you for all the thousands of shareholders that we've met over the years and walked around factories and loved all the interactions, even the tough ones.
Respect.
And looking forward to the call in the next 3 months, but I'll be on the other side listening in. Thank you very much.
Thanks.
Alrighty, so good conference call overall. I was happy with what I heard there. It sounds to me like business is bottoming. I will say that. That's the impression I got there. Sounds like business is bottoming, which is very good news. It sounds like the company's going to release several new products. I was thinking just one, but it sounds to me like actually several new products are coming, which is good. Obviously, there was a huge emphasis on AI, self-driving vehicles, robo-taxi fleet, all those sorts of things, which all that information was good, but for the people that are sold on that, we're already sold on that. And for the people that aren't on that wave, I don't know if anything necessarily changed their mind today. Maybe, maybe not. Because a lot of people just, it's one of those things. You're either on or you're off. You're on or you're off the wave in terms of thinking about Tesla's going to solve autonomy, robo-taxi fleets, the Uber of the future, but with no driver inside. And then if we talk about Optimus, the robot opportunity, and all those sorts of things, I mean, that's for a lot of people, that's too much. Even a lot of us longs, that's still kind of like way out there, right? I'm kind of still thinking about robo-taxi fleet before I'm thinking about Optimus and those sorts of things, right? So I would say overall it was a good call. I think Elon was pretty focused throughout that call. I think he realizes that, the stock's obviously been destroyed and that, he wanted to come through with a good performance, and so everybody understands where the long-term vision's going for Tesla, right? Because when the short term's not that exciting, which it's not right now, right? But, a few factors to kind of keep in mind here, and some things I was kind of looking at, right, is if we take a peek here, and, we put Tesla against its competitors, right? Companies like Rivian and Lucid. I mean, gosh, those companies are just in a horrible place. And then if you want to say their competitors are companies like the Fords and the General Motors and companies like that, those companies are pulling back on their EV efforts. So I just don't know how it's interesting because I think all of Tesla's competitors are going to put themselves in a really bad spot. The Rivians and Lucids, I don't know if they're ever going to get to scale where they can actually start making some money, which means they're just going to keep burning money, and eventually you might have to face bankruptcy, right? And then in terms of these other competitors, they keep pulling back. They keep pulling back on kind of the EV plans. And the worst part is those companies are pulling back when their profits are pretty much all-time highs. Like you look at many of the traditional automakers, their profits are near all-time highs. And so if they pull back right now, what happens if we actually have a recession a year from now, 2 years from now, 3 years from now? Those companies might take their budgets for autonomy and EV down to nothing. Not because they want to, but because they're forced to in that situation, right? Because they're huge debt loads, interest payments, and then if their businesses started actually losing money, because like I said before, this was on the Fast Money program, I think they were talking about, Tesla, disaster quarter, blah, 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 right? Okay, fair. But like I said, Tesla reports a disaster quarter, and it's still, they're making bank. I mean, they're still making a fortune, even in a bad, disastrous quarter that they call it, right? When other automakers report disastrous quarters, horrible numbers, those companies, guess what? They lose fortunes of money. Next thing you know, they're losing $1 billion a quarter, $500 million a quarter, several $1 billion a quarter. So that's the big divergence we have here. So Tesla, as it's always been, it's a long-term game. And the long term looks to be setting up very, very well. And I said this last year. I would not want to compete against Tesla. Elon's proven he's brutal with price. He'll drop price to whatever. He'll kill off Tesla's massive margins to make much smaller margins, which is an Amazon playbook. And I always said the best comp for Tesla is Amazon. So he's willing to kill off their margins in the short term, which, by the way, their margins are actually still pretty great compared to most automakers, even in bad margin times. But he's willing to take down margins for the long-term focus of the company, right? And so that's a playbook out of Jeff Bezos and Amazon. Amazon's always been famous for, if they got to take down margins, they'll take down margins because you can't compete with that. Other guys can't compete with that. It's unacceptable for Walmart or Target or other competitors, right, to take their margins down. You just aren't allowed to really do that. And so, that's huge. So, yeah, very excited. I walked away from that call even though I didn't get any information from that call necessarily I didn't already know, I still walked away from that call more bullish on Tesla for the long term than I went in with. Even though I really didn't get any information I didn't already know, it's just like, hearing it reiterated, hearing the management team talk about and lay out the long-term vision that everybody understands, I walked away from that call more bullish than I went in on the long term. And in the short term, I would actually do feel better about the short term than I went into that call as well. So that's some food for thought in regards to that I think is important. I left more bullish on the long term and the short term in regards to Tesla. So very happy about that overall, right? So, and I was showing you guys this during the conference call here. This is to lease a Model 3, guys. We're talking about $300. $300 in less than 3K down. That's insane. That's insane, right? And then they had this button where you can include the gas savings. So then you're talking about really the, $216 a month. That's insane to think about, right? I mean, you're just not getting a vehicle of that caliber at that sort of price point. And then I think I showed Model Y as well, right? Model Y, if you were talking about, because we all think about the sales price, which the sales price is pretty incredible. Even if you think about lease of a Model Y, check this out. You could get a Model Y lease $368. What? Less than $400 with less than 3K down? That's like nothing. For that vehicle? Wow, that's incredible. I just think the value proposition you're getting from Tesla is above everybody else, right? I mean, Jeez. Somebody said, are you worried about the high stock level for competitors and likely price reductions to clear that would make price increase difficult? Yeah, I think the competition is going to have a lot of issues. And when I say competition, obviously we know the EV competition, the Rivian, Lucids are having a lot of trouble. But I'm even speaking about the traditional automakers. I think they're gonna have some troubles coming here. I don't think their next few quarters are going to be very exciting. Let's just call it that. We'll see when the numbers shake out over this next few quarters. But that's what I see coming there. So, something to factor in there. Alrighty, guys, appreciate you joining me. Much love as always, and see you guys tomorrow for the big live stream, or see you on the main channel on YouTube tonight. Peace.